A thorough understanding of the business helps in making an intelligent investment decision. The strong understanding of a business is the basis of Buffett's investment strategy. And that's where he and Soros diverge. The secret to Warren Buffett's success is that he seeks out businesses that look like the company X, Y, Z. Learn why Warren Buffett and George Soros look for very different investments and what they have in common. The most crucial factor in Buffett's initial investment selection process is the company's profitability. Warren Buffett is sought after for more than just his investment acumen. What do you need to look for when you're evaluating a business? For Buffett, it's not enough to have a great business. Passive investors should follow Buffett's lead and buy shares of good businesses. Have you ever thought about beginning your own investment company? Here's what Warren Buffett would say to that. The two investment gurus have strikingly different portfolios. Welcome back to the Ring of Knowledge, your trusted source of practical financial knowledge. Today's video will discuss Warren Buffett and George Soros' investment strategy. Let's talk about who Warren Buffett is. The chairman and chief executive officer of Berkshire Hathaway has accumulated a fortune valued at over $80 billion. Along with his business partner at Berkshire, Charlie Munger, he has invested in a wide variety of companies and products, including Coca-Cola, Heinz Ketchup, IBM Computers, Dairy Queen, and Duracell, and even some real estate, railroads, and media firms and insurance businesses. However, Buffett's history is only part one of accumulation. He has committed to donating 99% of his wealth to various charitable organizations in the future. He was the second to be born to Layla and Howard Buffett. His birthday was August 30th, 1930. He was born in Omaha, Nebraska. His maternal grandparents operated a food store in the family home. Before being elected to Congress as a Republican in 1942, his father had a successful investment industry career and served on the school board of Omaha. When Buffett was just 11 years old, he made his first investment in the stock market by purchasing 3 shares of Citi Service Preferred for $38 a share. After the stock dropped to $40 and then climbed above that price, promptly sold his interests only to see it rocket higher. This taught him a valuable lesson. It's not a good idea to guess when it's best to buy a stock and when it's best to sell it. While still a youngster, Buffett worked as a newspaper carrier in Washington, earning enough money to purchase a farm in Nebraska. At the age of 17, Buffett enrolled at Wharton School at the University of Pennsylvania. After moving schools, he received his bachelor's degrees in the business administration from the University of Nebraska at Lincoln 2 years later. At that time, Munger was a 35-year-old lawyer from California who had returned to his hometown of Omaha to close the law office his late father had run. They liked each other and kept in touch even though they lived on different sides of the world. In 1962, Buffett started to invest in Berkshire Hathaway, a textile company in New Bedford, Massachusetts that was having trouble. He bought Berkshire in 1965, which he would later call the dumbest stock he ever bought. He fought that failing textile business for 20 years before finally giving up. Munger helped Buffett change his investment strategy by making small changes to Graham's idea of buying cheap securities and selling them when their prices increased. They worked together informally for a long time. Munger helped Buffett figure out how to buy good companies at a fair price and to keep them. They both claim that the year 1972, when See's Candies was bought, was the turning point. In 1978, Munger became Berkshire's vice chairman. Susie Buffett moved to San Francisco in 1977 to pursue a career in music. They stay married though, and talk daily and spent many holidays together. Buffett and Bill Gates started the Giving Pledge in 2010 to get rich people to give away half their wealth to charity. And Buffett has claimed that he will give away 99% of his wealth. Buffett claimed in 2015 that his son Howard would take over as the unpaid chairman of Berkshire's board of directors when he dies. When Warren buys into a company, he likes to study its annual reports as far as he can. He advises other investors and he follows it himself. He examines the company's development and the direction it's headed, conducts exhaustive research, and takes very careful but infrequent action. Once he has invested money into a corporation or bought shares in a company, he is hesitant to part with either. One of his aphorisms reflects that he prefers to make long-term investments. He is not a supporter of companies that stake their success on talents of every workforce member. Nor does he feel that having exceptional people making a significant difference when a company's core competencies are lacking. He claims that the company's good name is protected when an incompetent leadership is instituted in an otherwise disappointing business. Warren is fond of saying that a successful company should be compared to a castle, and that every day you should ask yourself, is the management expanding the size of the moat, or is the pond getting smaller? It is not easy to come across fantastic companies because there are few. Unusual circumstances come together to form moats, barriers that protect particular businesses from the harsher aspects of the market. Warren is outstanding when it comes to recognizing these franchises. When Warren takes over a company, Berkshire Hathaway, He immediately hires capable managers and generally stays out of their way. His fundamental pitch to company management is that they can put their faith in Warren to make intelligent investments with any capital generated by the company, which is something that all successful organizations do. He does not advocate for diversification among managers. The best 5 stock picks by Warren Buffett Investment. Number 5. Meta Platforms Incorporated. Alphabet's biggest competitor in internet advertising is Meta Platforms, which also owns Facebook, Instagram, Messenger, and WhatsApp. Meta's Reality Labs creates hardware and software for augmented and virtual reality like Horizon Worlds, as well as other metaverse platforms. So far in 2022, tech stocks have lost a lot of value. Unfortunately, as of June 17th, Meta shares have fallen 51.6% for the year, making it the worst stock on the list. Followers of Warren Buffett know that he sees market pullbacks as opportunities to purchase high-quality stocks at lower prices, so Meta's recent weakness might not put off investors who try to be like Warren Buffett. The company made $7.4 billion in net profit in the first quarter, but its stock is only worth 14.1 times its expected earnings in the next year. NVIDIA Corp. NVIDIA chips provide the massive amount of processing power needed for a wide range of cutting-edge technologies, such as high-end gaming, enterprise graphics, AI applications, the metaverse, Internet of Things, autonomous vehicles, and cloud computing. In recent decades, NVIDIA has been nothing like a typical value stock that Buffett would buy, but because of NVIDIA's constant growth and a sell-off of 47.3% this year, NVIDIA stock is worth 30 times what analysts think it will earn. In the initial quarter, NVIDIA had a net income of $1.6 billion and a growth in sales of 46.4%. Number 3. Microsoft Corporation. It is the biggest software company in the world. Windows also represent the company that owns the social media site for professionals called LinkedIn and the video game system called Xbox. Microsoft also recently said it would buy Activision Blizzard Incorporation for nearly $70 billion. Buffett looks for things like Microsoft's strong position in specialized software and the value of its brands when he buys stock. In 2021, Microsoft's net income was a whopping $61.2 billion, which is a lot of money. In the most recent quarter, Microsoft's revenue grew by 18.3% and its net income grew by 8.2%, but the stock still trades at a fair price of about 23.4 times forward growth in terms. Number 2. Walmart Incorporated. Walmart is the largest store in the world. It has thousands of stores and warehouses for Sam's Club members only. Buffett also used to own shares in Walmart, which he started doing in 2005, when he first said he owned 19.9 million shares. By 2009, Buffett had multiplied the amount he had invested in Walmart, but he sold out of the stock entirely in 2018. When Buffett sold his Walmart stock, he said that Amazon was a tough competitor for the company. Amazon is still a real threat to all traditional brick-and-mortar stores. Number 1. Visa Incorporated. Visa shares have done well in the last few months, even though the market has been falling. In the last 3 months, Visa shares have dropped 11%, while the S&P 500 has dropped 16.7%. Even though all the stocks on the list might be good choices for Buffett, the only one he owns is Visa. The third quarter of 2011, he put the first money into Visa. Since then, Visa has given Berkshire a total return of about 870%, while the S&P 500 has a total return around 281%. Even though Buffett first bought Visa more than a decade ago, Berkshire still owns about 8.3 shares. Let's talk about who George Soros is. He was born in Hungary in 1930 and survived the Nazi occupation of 1944 to 1945, which led to the deaths of more than 500,000 Jewish Hungarians. His Jewish family survived the Holocaust by obtaining counterfeit identification papers, hiding their origins, and assisting others in doing the same. Soros noted that many years later, not only did we survive, but we managed to aid others. Soros fled Budapest in 1947 for London, as the communists in Hungary consolidated their authority in the aftermath of the war. He attended the London School of Economics while working part-time as a train porter and a nightclub server to support himself financially. In 1956, he uprooted his life and moved to the United States, where he established a successful career in financing and investing. It was in 1973 when he opened his hedge fund and became one of the most successful investors in the annals of United States financial history. The Open Society organizations are a global network of foundations, partners, and projects active in over 120 countries. Thanks to George Soros and the fortune he amassed, our company was named after the philosopher Karl Popper, who Soros was introduced to for the first time while he was a student at the London School of Economics. Our work also reflects Popper's philosophical influence on Soros' thinking. In his book Open Society and Its Enemies, Karl Popper argues that civilizations can only thrive when they provide democratic governance, freedom of expression, and the respect for individual rights. This approach is at the center of the work done by the Open Society Foundations. In 1979, George Soros started his career as a philanthropist by awarding scholarships to black South Africans living under apartheid. In the 1980s, he contributed to the open exchange of ideas in communist Hungary by funding academic travels to the West, providing assistance to budding independent cultural organizations, and participating in several other initiatives. He was one of the first people with a lot of influence to claim that the war on narcotics was arguably more harmful than the narcotics problem itself. This helped start the medical marijuana movement in the United States. Soros, now in his 90s, continues to take an active personal interest in the Open Society Foundations. He has traveled extensively to support our work and advocate for beneficial policy reforms which world leaders in public and private settings. The Open Society Foundations announced in 2017 that George Soros had donated an additional $18 billion of his fortune to fund the future work of the foundations. This brings the total amount of money Soros has donated to the foundation since 1984 to more than $32 billion. Soros once wrote, "My success in the financial markets has given me a higher degree of independence than most others." Soros uses reflexivity to anticipate market bubbles and other opportunities in the market. He places large wagers with high degree of leverage on the future path of financial markets. His illustrious hedge fund is known for its global macro strategy, a philosophy centered around making massive one-way money betting on the movement of currency values, commodity prices, stocks, bonds, derivative products, and other assets based on economic factors. His hedge fund is famous for its global macro strategy. When the pound's value plummeted, Soros repaired his creditors based on the new lower value. As a result, he made a profit of more than $1 billion from the difference between the value of the pound and the value of the mark during just one trading day. After closing down his position, he raked in close to $2 billion in total earnings. Soros spread his assets across various industries and assets classes to lower his overall risk exposure. Soros claimed, "I found that the economic theory currently taught in the universities has a major flaw because it's based on natural science, especially physics. But human affairs are fundamentally different from natural events because they involve people with their wills and actions based on how they see the world, not how things are. So the actions of the participants add an element of uncertainty that isn't present in the way physical objects act. When it is necessary, Soros will make use of the leverage to amplify returns while reducing risk exposure." Soros is known for short-selling currencies, which means he bets against popular opinion to profit from possible price changes as the markets correct themselves. During the Asian financial crisis in 1997, Soros is also said to have made a massive bet against the Thai baht. It is thought that he bet $1 billion of a $12 billion holding that the exchange rate would collapse, which is what happened when the Bank of Thailand ran out of ways to protect its currency and fight off short sellers. Soros is known for his many investments in high-profile firms and industries, where he seeks to capitalize on underappreciated chances instead of buying and selling assets in a frantic attempt to make a quick profit. Soros likes to hang on to his investments for extended periods. This is due to his belief that markets trend to be cyclical, and since he plans to invest for the long term, he will be able to profit from any future price increases. Soros actively manages his investment portfolio, evaluating current market conditions and implementing any required adjustments. He employs both fundamental and technical analysis to ensure that his choices are well informed. Soros adheres to a stringent risk management strategy, ensuring that his portfolio is never overexposed to any asset class or market area. He keeps a close eye on investments and makes any required adjustments to ensure that the profits are maintained while minimizing the risk of loss. Here are the top 5 picks by George Soros. Number 5. Alphabet Incorporated. Soros put money into Alphabet for the first time in the first quarter of 2017. Since then, the stock has more than doubled in return of the S&P 500 and has tripled its value. Soros bought another 100 to 180 shares of Google stock when Alphabet's stock fell in the second quarter. The Soros Fund owns about $115.8 million worth of 1.06 million Alphabet shares. Number 4. Allegheny Corp. In March 2022, Warren Buffett's company, Berkshire Hathaway Incorporated, announced that it would buy Allegheny for $11.6 billion, or $848.02 per share. During the second quarter, the Soros Fund also bought about 201,961 shares of Allegheny worth more than $168.2 million. Soros' investment in Allegheny seemed to be a simple merger arbitrage, but since Y stock trades for about $841, which is about 0.9% less than Berkshire's buyout price. Number 3. D.R. Horton Incorporated. Soros' investment in D.R. Horton by purchasing shares in the first quarter of 2019. The Federal Reserve's effort to control inflation, combined with rising mortgage rates, have had an unintended consequence of exerting downward pressure on the housing market in the United States in the year 2020. Soros sold 37,097 of his D.R. Horton shares during the second quarter, reducing his overall investment to $2.97 million, valued at approximately $197 million. Number 2. Amazon.com Incorporated. As the corporation has grappled with decreasing growth, Amazon's stock price has dropped by around 12% since the beginning of 2021. A quarter later, in the fourth quarter of 2021, Soros finally bought some shares of Amazon. Soros' fund management increased its position in Amazon by around 41% during the most recent quarter after purchasing 590,160 shares. Soros maintained almost 2 million Amazon shares, valued at nearly $212.8 million. Number 1. Liberty Broadband Corp. In the most recent quarter, Soros reduced his Liberty Broadband holdings by almost 34% by selling 919,207 shares. Even after the transaction, Liberty Broadband maintains the third largest stock position held by the Soros Fund Management. The value of the fund's over 1.5 million shares is around $202.3 million. Liberty stocks underperformed the S&P 500 in 2021, but it has been a solid investment over the long term. Since Soros first purchased the shares in the second quarter of 2016, the price has increased by approximately 100%. So who is more affluent? George Soros or Warren Buffett? Soros has a net worth of $8.6 billion, far lower than Buffett's net worth of $124.3 billion. When it comes to money, Warren Buffett is light years ahead of George Soros. Making $1 billion in a single day is impressive, but bringing down the financial system of Great Britain in a single day is truly revolutionary. Warren Buffett and George Soros are known as two of the world's most brilliant investors and financial thinkers. Buffett is known for using the value investing technique, which involves searching for businesses with solid fundamentals. Soros is more of a speculative investor, relying on short-term market fluctuations and highly leveraged deals. So that's all for today's video. If you like this video, click the like button and ring that bell so you don't miss anything. We'll have another video for you soon, but until then, take care.